In this video we are going to explain and demonstrate 4 ways you can use relative strength index known as RSI in your trade to enhance your trading success. Don't fail to like and subscribe, as we are going to release more videos soon. Let's demonstrate various trading strategies on how to use the RSI indicator in today's video. The strength of uptrend in the market and strength of downtrend is compared using the relative strength index, RSI. The range of this determined number is 0 to 100. Readings of 30 or less are regarded as bearish, while those of 70 or higher are considered bullish. It can also monitor overbought and oversold in the market. How to use RSI. Below are the ways and strategies of how one can use RSI indicator. Stay tuned as we explain and demonstrate these ways and strategies of applying the RSI. The RSI is regarded as overbought when it rises above 70 and oversold when it drops below 30. If necessary, these conventional levels can also be changed to better suit the currency pair or stock. For instance, you would wish to raise this level to 80 if currency pair or stock frequently approaches the overbought level of 70. Please keep in mind that the RSI may spend a lot of time in overbought or oversold zone during powerful moves. 2. Patterns. RSI also always creates chart patterns like double tops, double bottoms, and trend lines that may or may not be clearly shown in the price chart. Look for resistance or support on the RSI as well. 3. Trending market. During an uptrend or bull market, the RSI typically stays in the 50 to 90 range, with the 50 zone functioning as support. During a downtrend or bear market, the RSI remains within the range of 20 and 50, with the 50 level functioning as resistance. Depending on the RSI parameters and the strength of the underlying trend of the currency or market, these ranges will change. The default option is 14. However, 9 is the best number to choose for speedy price response. Divergence. When the price is going against the RSI indicator, this is known as divergence. Divergence signals that the trend may be weakening, and in extreme situations, may even result in a price reversal. In a downtrend, when the price makes a lower low, while RSI makes higher low, that means the trend is losing steam. When the price hits a higher high, while in a bullish trend, but your RSI makes a lower high, the trend is losing steam. That means, the most recent bullish candles were weaker than earlier price momentum. In next coming video, we will demonstrate and explain divergence in details, how you can trade profitably with divergence. Don't miss it. Trading strategies using RSI. One. RSI with Mark D. RSI analyzes price change in respect to recent price highs and lows. Mark D gauges the relationship between two EMAs. Combining these two indicators gives traders a more technical view of the market. We observe the relative strength index, RSI, departing an oversold level, which is a definite buy signal. Our second signal comes from the Mark D's bullish crossover that gives confluence setup. 2. RSI with moving average crossover. In this trading strategy, the RSI and the moving average indicator will be matched. The moving averages we will be using is 5-period and 20-period moving averages. We will buy or sell the currency when the RSI crosses the 50 line and the moving averages crossover is in similar direction. Until one of the two indicators show a reversal signal, we will hold the position. You can see similar crossover of RSI below 50 line and moving average crossover, giving a bearish signal. Three. RSI and Price Action Trading. This is 4-hour Euro to US dollar. For this strategy, we are going to use the RSI signals in conjunction with any price action indicator, such as candlesticks patterns. We can see that the candlesticks formed an inside bar. You can see the two bars inside the mother bar. Secondly, RSI leaving oversold level, both giving bullish signal. We are to hold the trade until a contrarian RSI signal or price movement confirms that the move has ended, such as support and resistance areas. Four. RSI and Relative Vigor Index. For this RSI trading strategy, we'll combine the RSI and Vigor Index. You will only open a position if both indicators give similar signals. When RSI reaches oversold or overbought zone and reversing, look for matching Vigor Index crossover. If Vigor Index crosses up while RSI is leaving oversold zone, that should be a buy signal. When Vigor Index crosses down while RSI is leaving overbought zone, that should be a sell signal. Then, hold the position until one of the indicators gives opposite signal. 5. RSI, with Keltner Channel indicator. Keltner Channel with the RSI, is another combination that helps in identifying trends. The buying rules for this strategy is, price breaks above the middle line of Keltner Channel, and the RSI is above 50. When the price breaks below the middle Keltner Channel, and the RSI is below 50, it likewise gives sell signal. When you enter the market, you place our stop-loss order, below or above recent swing high or low, as case may be. You should use a trailing stop, if you want to ride the trend, as much as possible. If you're new to trading, combining the relative strength index, with another indicator, is a good start. Pairing it with another indicator, you will get a fixed value, from which you can decide. It also eliminates many of the vagueness, associated with trading. Thank you for watching. Drop your comments, or questions below, it will help us serve you better. And don't fail to like, and subscribe, as we are releasing another video soon.